market share numbers for Tesla sound credible to you, that they would fall from something in the 70% neighborhood rather quickly to 25% or so.
Yeah, absolutely. It's a numbers game. You have two things favoring General Motors and Ford on the electric vehicle side in the U.S. The first thing is capacity. GM's going to be converting 3 current assembly plants for electrical vehicle production. And the second thing is the commercial segment of the market. The commercial segment of the market is dominated by General Motors and Ford. And when you look at the electrification of the vehicle market in the United States, the total cost of ownership, new product, and then some of the social pressures and then the functionality with electric vehicles for the commercial side of the market all favor General Motors and Ford.
So, Michelle, if Tesla can continue to hold on to a number 1 or number 2 position, who's going to be the next one in here, the number 2 player, or maybe even the number 1 player when we get 10 or 15 years down the road?
Well, I think everybody's going to be playing. So there's going to be a lot of nibbling around the edges. I mean, if we look at right where we are now, Tesla's, I think their market share in the third quarter was 70%. They probably cannot hold on to that, as Michael said. But GM's going to take some of that. Ford will take some of it. Someone you didn't mention earlier was Hyundai, very aggressive in electric, and Volkswagen as well. So everybody's going to be in the game. Everybody's going to try to grab a piece of the pie.
Michelle, what about the sort of profitability here? I mean, Tesla is already described as the most profitable mass market EV maker, maybe the most profitable automaker, period, given its operating margins, which I think are almost 15%. Kind of, I think Mercedes is close to that, but someone like Volvo is way behind. And the investments they're making in the gigapress and other technologies to get these cars made quickly and at scale, can rivals match that?
The other companies are going to have the financial investments they're making and profit issues as well. I'm not a financial analyst, so I can't speak to the margins, but everybody's going to make these investments. And right now, it's not a hugely profitable business.
Exactly, Michael. And that's the issue, because this is not a hugely profitable industry to begin with. So what would your own sense be about the massive, look at the investments it's taken Tesla to get to this point. They've mounted, obviously they issued a ton of equity over the past couple of years to help fund these build outs. They're bringing Austin online. They're bringing Germany online. Where does that leave the others? We've seen the prototypes. We've seen the models that they're launching. Can they produce them at scale with the same profitability?
Well, I don't follow Tesla, so I'll leave my comments to them aside. But if you look at what General Motors is doing and Ford with their battery capacity in the North American market, it will be larger than Tesla's. And when you get right down to it, cost on an electric vehicle comes down to the battery. That's what it is. And so if you can put scale into battery production, yes, General Motors and Ford will be the low-cost producers because they're going to have so much volume coming from pickup trucks and commercial vans. And that gives them a huge competitive advantage in the marketplace and from a profitability standpoint.
Do you see that happening in the near term? And how much do you think their production numbers overall will include EVs in the next couple of years? I guess my question, Michael, is how quickly can they get up to something approaching a major scale?
Look, Ford has basically sold out the Mustang Mach-E for this year, and it's the first electric vehicle that's not a Tesla to have had success. Now, later this year, early next year, they introduced the F-150 Lightning. That's already got orders for over 150,000 units. That gives you scale. And as you go forward, people are focusing on the investment. GM has set aside $35 billion by 2025, and in the case of Ford, $30 billion. But if you look back to the 98 to 2002 period, General Motors had to put $35 billion to shore up their pension. They spent another $10 billion on acquisitions, and they returned $15 billion in cash to shareholders. And if you look at Ford, it was a similar type thing. They spent a similar amount of money. So this time around, what the vehicle manufacturers are doing is they're putting that surplus cash into product, into competitive product. GM and Ford are also bringing on partners. They have partners for the battery production. Honda invested in General Motors in their Ultium battery technology. And so these are very different companies with cost structures that have been reduced 50%.
Shepard Smith here. Thanks for watching CNBC on YouTube.